It's Monday, that means it's Setup Monday. Let's talk charts, let's talk setups. So BTC and ETH both had, at this point, somewhere between a 27% and a 33%, I think for ETH, maybe a pullback, which in most markets is detrimental to the trend, but in this case for BTC and ETH, historically, not unheard of, not unseen, happens rather regularly in both markets. One good measure for pullback potential or pullback places, pullback spots, ways in which the dip can be bought is the cloud indicator using the settings 20, 60, 120, 30, which is what you're seeing here on the daily. I like this best on the daily. A lot of people ask me which time frame I'm using or which signals I'm taking the time frames from, some variation of that. I'm always looking at the daily for the most part. I'll show the 4 hour and what I mean by that in a second. But if we look at the daily, we've had two types of bullish bounces so far. We've had the Tenkan bounces in November, December, and we've had the Kijun bounce in early January. And once again, we're getting the Kijun bounce here, which is this red line. The blue line is the Tenkan. You can think of them as fast and slow moving averages, or a slower versus a faster moving average. Even though that's not technically what they are, you can think of them like that because effectively it's the same thing. So if these cross, you're definitely bearish on intra-trend movements, and so far we've not crossed since early October. So into this week, into the month of March, it is March 1st now, what I'm looking for to not happen if I'm bullish is a TK cross. If I'm bearish, I want a TK cross. I want a trade from basically 45 to 36. That's the edge-to-edge trade I'm referring to. How this works is if price dips into the cloud, it typically will reach the opposite end of the cloud. And you can backtest this. It happens rather frequently on the daily, especially when there's a wide cloud as there was here. So the first step is bounce on the Kijun, yes, no. If yes, continuation. Go for higher highs. If that fails, look for a potential bearish reversal through the cloud. So that's more than this week away at this point. That's through the month, probably late March. But I would watch what happens here over the next couple days. If we break 50, game on, we're bullish. Bitcoin's back, meat's on the table. If we break lows again at 43, then we're in for some hurt, definitely. So 43.50, those are the key support resistance levels I'm watching this week. ETH as well has also had Kijun bounce several times, one in late November, one in early January, and now two in February. Same story. If you're bearish, you want to see this cross over the next couple weeks. If you're bullish, you want to see price move back to all-time highs. You want to see price continue to test resistance on the way up. And you definitely don't want to see that 1300 low break. Again, we're setting up for some sort of move through the cloud from 15 to 12, basically. On ETH, that's a ways away, most likely. Something else you're looking for is basically this recross above the cloud. Here's a small, tiny example of that edge-to-edge move. But for both BTC and ETH on the daily, if you get this recross, then that's the easiest signal in the world as far as the long reentry is concerned. And we can look at the trend in many different ways. This is alligator fractal on the 12 hour, so I'm zooming in a little bit. And you can see that this trend indicator and time frame can capture, with moving averages, the trend rather well. The idea is if these are crossed green, red, blue, we're bullish. If it's blue, red, green, we're bearish. And your entries and exits come during these crosses. Alternatively, the entries and exits come at breaches of these fractals. So if price is moving up, breaking these successive fractals, you're adding to your longs in this case. Once it breaks a fractal, if there's a bull trend to the downside, you're out of your position entirely. So if this is bearish, you're adding to any short on the lows here at 43, which is just, again, another way of what I said with the cloud. Alternatively, if you're bullish, you're looking for a flip of these MAs like you did in late January and mid-December on the 12 hour. So you're just looking for trend confirmation. Right now, it's definitely consolidation. It's definitely at a spot where it's a little up in the air. Here's another way to look at this. Just super simple, 1050 EMA. Very similar to the 2060 cloud settings. Just super clean, very few signals. That's what you want to see if you're trading anything. You don't want to see repetitive long short entry signals. Long, close your long, re-long, hasn't told you to close your long yet on ETH, for example. So if I see a cross recross here, I'm bullish. Here's how this looks on BTC as well. Long, close your long, re-long, close your long, re-long, hasn't told you to close yet. And typically with trend indicators like this, you treat every cross as if it's real and trend is flipping. Now that's one way to view it. Another way to view this is have some sort of confluence of support resistance. But the idea is that the trend entries and exits may sometimes underperform, but when they overperform, that pays for all of the losers and all of the poor performing crosses. And you can backtest this. I think this is actually one of the better, the 1050, which is why I use it for the Enzyme stuff that we trade at Techme Capital between BTC and ETH and USD. The 1050 historically has been very powerful at trend prediction. If we look at the 4-hour cloud on ETH, very simple. I'm just looking for all of the signals to reflip bullish again. Currently, we held above the previous all-time high. Resistance turned into support here in this case. We were bull divvying a little bit. So into the week, I'm looking for bullish signals there. BTC, much of the same. Looking for bullish signals into the week with price above the cloud, TK recross, cloud recross. Here's a picture of what that would look like. You can see how we went bearish below the cloud, struggled to get back up above the cloud, and then eventually broke above with everything in alignment. So that's what you're waiting for. At least that's what I'm waiting for if I'm trading this on low time frames. And then kind of zooming way out, if we look at the pitchfork for BTC, pick 3 points, you get a rate of change. This is the magnet for trend, the median line here. If price is below the median line, it wants to return up. If it's above the median line, it wants to return below. So there's always this pulling back to the median line. And if price gets way above the pitchfork, like in ETH's case, I'm definitely more concerned with bullish continuation because it's vastly outperforming the rate of change historically over the past 2 years, maybe. So if you are on the camp of this is a parabolic up move, you can ignore the cloud. If you're not, you can have some reservations, qualms, and concerns about where we are here. And that ETH is going up a little too fast, basically. And that it will continue to slightly underperform BTC. Now we may see just continued rotation back and forth between the two as one outperforms the other. But on aggregate, ETH is definitely more overbought than BTC is here. Then I just want to comment on Doge, which is back somehow consolidating near 100 sats. I've said for years that if Doge can actually consolidate at 100 sats, it might have a chance at some sort of continuation move to the upside. Historically, it's never been able to hold 100 sats. It has always been sold off, or that's been the high, basically. So this is a bit encouraging that it's being bought here by somebody. It's not for me, because I'm not going to bet against history. History says this sucker goes below 30 sats invariably every time. The cycle is a year long at least before revisiting that 100 sat high most of the time. So I'm not one to bet against that. I just know this is a chart that a lot of people are looking at right now. And here's another one I get a lot of questions about, Link USD. Big community out there, obviously, of Marines. If we use the same pitchfork rationale, you can see it got way above that median line, and it's since returned to that median line. So much like late last year, this could just continue to hold within the median line, and all of that represents a buying opportunity for me because that's mean reverted for the trend. It's satisfactory for continuation. If we look at the pitchfork as a buy zone here, sell zone up here, then we're still adding, at least I'm still adding to a position if we're in the median line of the pitchfork. Now, if we fall below, you're out of your position. If we fall above, you're selling. Rise above, rather. You're selling everything. But overall, this looks completely healthy, completely natural. It is a 3-year pitchfork at this point. So it's done extremely well based on technicals. And if you're curious how I'm trading this, you can pop on over to Enzyme, check out the Technic Capital Holistic ETH BTC fund. You can view all the trades. You can copy trade. You can contra trade, really, if you want to, on another platform. But you can see the total AUM here as well. So you can check out everything. It's on chain. It's non-custodial. It is through ETH and USDC, basically. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.